Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into Apple's financial report for the quarter that ended in March 2025, and believe me, there are a few interesting things hidden inside. Are they still the king of tech or facing some tough challenges? Let's find out. Apple just released their Form 10Q, which is basically a quarterly checkup that companies do with the Securities and Exchange Commission, or SEC. The report card shows sales, profits, and any potential problems ahead. A quick preview shows increased sales, but let's dig into the report to see where those sales came from. Alt and Tully March. 25 Norm 2025 Tom wrote. Let's jump right into the good stuff, those financials. First up, let's talk about revenue. Apple made a total of about $95 billion, which is an increase from about $91 billion in the same quarter last year. So that's definitely a positive direction, indicating that Apple is selling more of its stuff and services. Operating expenses are something that a company needs to pay to keep running. It includes things like research and development as well as administrative costs. Well, Apple had about $15 billion of operating expense. These expenses are a necessary investment for Apple's future. After taking all the costs into account, Apple's net income or profit reached almost $25 billion compared to around $24 billion last year. This translated to earnings per share of 1.65. Now, how about Apple's current financial health? Well, they had about $28 billion in cash and cash equivalents. Even though that is a huge amount, last year, the same period, they were closer to $30 billion. So they seem to be spending a bit more and keeping a bit less than last year. Okay, so what's selling hot and what's not? Well, the iPhone still accounts for almost half of Apple's revenue, at a whopping $47 billion. Not far behind, we have service revenue at over $26 billion, including things like Apple TV and Apple Music. But iPad seems to be lagging behind with only about $6 billion in sales. Also, it is important to point out how much revenue was from previous quarters. From previous deferred revenue, there was $3.67 billion. This essentially means that a lot of these sales came from previous payments. So a big part of the sale is already done by the time these numbers are calculated. Let's talk about cash flow. It seems like Apple spent over $49 billion on financing activities. Most of it went to repurchasing shares, which is essentially buying their own stocks. This strategy is meant to drive up the stock price. Scroll non-current CoinMarketable securities screw. Looking at different sides of Apple, they had almost $85 billion in non-current or longer-term marketable securities. These are generally safe investments such as bonds that can be sold if need be, but usually provide a long-term growth plan. Next up, let's talk about Apple's debt. This is how much money they've borrowed. Commercial paper, which is short-term debt, is around $6 billion. But the term debt, which is a longer duration debt, Apple has about $92 billion. This means Apple has a great deal of debt it needs to pay in the future. On the equity side, accumulated deficit has slightly gone down from $19 billion to $15 billion. As well, Apple still kept paying shareholder dividends to keep them happy. The total outstanding weighted average diluted share is 15.23 billion. Another key point is that third-party cell networks are where Apple gets a good chunk of its revenue from. They made up about 37% of Apple's total trade receivables. There was also about 200 all-in shares of its common stock repurchase for $48.3 billion. And the compensation that Apple paid in shares, that was about $6.5 billion. This is a major component that is often missed when simply looking at the monetary value. Apple is split up in different geographical sales regions. The Americas have the highest sales amount at $40 billion, with Greater China having around $16 billion and Japan at $7 billion. But this also means that Apple is widely diversified and doesn't rely on only one region. Time to address some potential issues. A lot of it has to do with regulatory pressure from Europe and the US with Antitrust and Digital Market Act investigations. Specifically, the European Commission fined Apple $500 million, giving enough payment options outside of the Apple App Store. In the balance sheet, we see shareholder equity has risen slightly. Shareholder equity has risen slightly. Shareholder equity is the remaining amount of assets that shareholders will have after all liabilities or debt is paid. Apple is pretty aware of the issues coming their way. This includes restrictions on international trade, geopolitical conflicts, and potential data and component restrictions. These may force the company to change its operations and hurt results. They mention things that most companies are dealing with today. They also talk about potential natural disasters and public health issues. These risks are not unique to Apple. Now let's bring it all together. The financial numbers show us that Apple's revenues and profits are growing. Also, Apple has enough resources to keep operating well. Still, there are concerns. Apple has been investing in their own stock. Also, they are facing a potential issue in the European market because of fines. As well, keep a close eye on China. If their economy has changes, Apple might be heavily affected. All in all, I think Apple is a strong company to keep an eye on in the future. It has made excellent returns to shareholders with a safe, well-diversified revenue strategy. Thanks for tuning in to Corporate Decoder. Hope you got a lot out of it. If you liked the video, don't forget to hit that like button, subscribe for more deep dives, and drop a comment below what company you would like us to analyze. See you next time.